Alright, guys, so the whole world is skeptical of the US, and frankly, everyone is getting really tired. The world is starting to push back, which is not a big surprise. Today, we need to cover two big events that confirm BRICS, or the global majority, is seeing through Trump. He's using a combination of threats and maneuvering to save the US economy, but the world is beginning to see through it. Now, a big focus is the chip war between the US and China. And by now, we know the chip diffusion rule has collapsed. Washington has given up trying to ban chips from the world. And because, like it or not, the chips will magically appear in China one way or another. So the new approach is to start selling more chips to Chinese consumers. And it's more than just immediate revenue, it's about the future of tech demand.
You have three things. One, you have excellent AI technology already, as I mentioned before. Second, you are extremely good at mechanical and electrical things. It's called megatronics.
Yeah.
China is very good at that. And then third thing is you have a very large manufacturing base to hire those robots. And so these three conditions are very unique in China. So I'm very optimistic for robotics development here in China.
Now, as Jensen pointed out, China has a vast industrial base. Coupled with their strong AI capabilities, chip demand will only explode higher, especially as we move towards a future in robotics. Now, let's be straight with this. China knows what the US is trying to do. The grand aim is to restrict Chinese tech progress. They couldn't do it with sanctions, they couldn't do it with restrictions. So the game plan is to use free markets, to use the capitalistic nature of markets, and this is the only card Trump has left to play. And his tech advisor David Sachs just confirmed this. We are not selling the latest and greatest chips to China, but we can deprive Huawei of having this giant market share in China that they can then use to scale up and compete globally. Now, firstly, this is not going to work, especially if you deny China the most advanced chips. If you hold back on the Blackwell range or better, companies like Huawei, they will step in and fill in the gap. But beyond that, realize that China is not just passively sitting around, they understand the threat. If they allow US chips to flood their markets unimpeded, it could hinder their domestic tech progress. Plus, there are big security concerns that need to be addressed as well. Now, buying US energy like oil and gas is completely different versus relying on US technology. It's night and day. Now, Beijing has summoned Nvidia to discuss security risks on its H20 chips, and now the state media is amplifying this concern. China cannot allow flawed chips into the country, and the concerns are real. Are there backdoors in the products? Are there tracking capabilities installed on them? And because the last thing China wants is for the Americans to know how far or how fast their progress is a really big concern, especially if the chips are used in critical industries like robotics and EVs. But this is just one side of the coin. The entire Chinese ecosystem, especially in semiconductors, is geared towards self-sufficiency, which means they need to champion their own flagship companies. This means giving chip makers like SMIC vital revenue to survive and thrive. That also means allowing Huawei to make as much progress as possible within the shortest amount of time. And if the future truly is in AI and robotics, trying to close the tech gap with the US is paramount. Huawei, for example, is about to test drive their 910D chip to outperform the H100 for Nvidia, especially when it comes to power efficiency. Now imagine a chip that can use less energy, it really gives you extra punching power. The tech gap is closing and it's freaking Washington out because they know inherently the advantage China has. Now once parity is reached, they will concentrate on making the chip ultra affordable. And it's not just a race for China's market, it's a race for the global market. The real ploy isn't just to sell to Chinese consumers, it's to maintain the gap and stop Huawei chips from flooding the market. Now, the BRICS economies are a fantastic example of the future. By 2032, semiconductor demand there will reach almost $210 billion. That's a lot of money that China will have access to, especially if their chips continue to progress at this rate. The US, on the other hand, will be facing a world of trouble thanks to the tariff war. Now, chips from Taiwan could be facing an additional 20% tariff hitting to the US. So now US tech progress is becoming much more expensive. Plus, the idea of more chipmakers shifting production to America is not the end all and be all solution. Now, it sounds good on paper, but it's not practical at all. AMD CEO expects chips from the US TSMC plant to cost up to 20% more. So, tech progress as a result of reshoring is about to get more expensive in isolation. If the US has total chip dominance, then a 20% bump isn't really a problem. But a big challenger is China. If Beijing manages to close the gap soon, then US based chip makers will be instantly uncompetitive. Trying to export out to the world will become more and more impossible. Now, the chip war is fundamentally still the same. It's to slow down China, just that the approach is quite different here. Once they reach tech parity, the big advantage in power will overwhelm US chip production. Now, China's solar power output alone shows how exponential this edge is getting. Chinese power from solar panels alone has tripled in 5 years, and this should be extremely alarming. It means less reliance on Western fuels, it means solar tech is improving by leaps and bounds, it means a lot of diversification into clean energy. And that's why Chinese imports of US fossil fuels have dropped to near zero. We can look at the chip war in their exact same lens. Now, sure, China can buy more chips for Nvidia, but it creates dependency, and in a worst case scenario, a real risk if Trump decides to shut off the tap. Beijing isn't going to take the bait, not this time. And speaking of defiance, BRICS is not going to bow down to Trump's threats. Now, a few days ago, the US punished India with a 25% tariff, and that's almost as high as the rate slapped on China. The US also did a follow up. If you dare to buy Russian oil, we'll punish you even further. And for all we know, the tariff rate could double on any country importing oil from Putin. And here's Besson showing his displeasure with the Indians. Basically, he's complaining again.
And also, India's been a large buyer of sanctioned Russian oil that they then resell as refined products. So, they have not been a great global actor.
But it seems India is pushing back. Government officials are signaling crude imports from Russia are not going to stop. And that's despite the ultimatum given from Trump. India has saved tens of billions of dollars buying Russian oil, and that's more needed than ever before, especially during this tariff war. In other words, Russian oil is subsidizing BRICS economies in this difficult period. And that's why Besson himself is threatening buyers of crude all the way from Moscow. He even went all the way to warn China, if you dare to do it, we'll make you pay. You'll be paying 100% tariff.
So I think anyone who buys sanctioned Russian oil should be ready for this.
What was their response to that warning?
The Chinese take their sovereignty very seriously. We don't want to impede on their sovereignty, so if they'd like to pay 100% tariff, pay it.
And I think the US has come to a realization our tariff war will not work if the world still manages to manufacture stuff cheaper than US industries. So we need to find a way. We need to get rid of any advantage they have. But here's the big problem. The slippery slope that BRICS will get on if they comply. If they do bow down now to this demand, what will be next? Besson could threaten trade with China. He might force countries to stop bilateral currency settlements and default to the dollar. Now, all this might seem outrageous, but is it really? This is where we need to look inwards at the US economy. We are seeing big cracks happening despite the beautiful picture Trump is trying to paint. Things are destabilizing really fast. Remember the massive collapse in jobs just a few days ago? That big 250,000 revision crash that stunned everyone? That one event that caused the US stock market to plunge by nearly 3%. Now, Trump is threatening to fire the Commissioner of Labor Stats for this revision. In addition, he's also hammering Jerome Powell for not slashing interest rates. Well, what do you expect amidst a trade war? Companies have to pass the tariffs down to consumers. People start to buy less and business begins to slow down. As a result, companies hire less and probably need to fire people. And this chain of events is predictable and it isn't that hard to extrapolate. Simple cause and effect. The tariff revenue Trump is getting also isn't enough to run the federal budget. is exploding and it reveals the underlying situation that's getting worse every single day. There's a reason why many countries are trying to outweigh and outlast Trump, because a US debt implosion might be the triggering event to stop all this mess. In July to September, the final quarter of the 2025 fiscal year, the borrowing is outrageous. Besant is expected to borrow $1 trillion from the global economy to keep the US afloat. But here's the big catch: investors, especially foreigners, will be very hesitant in buying. The dollar itself is in crisis mode, and lending the US money is effectively funding Trump's trade war. And this means we can expect yields to continue staying elevated, which isn't good for the overall debt situation. So, yes, this is probably turning out to be a game of chicken. Will Trump dare to escalate the trade war further, or will the US bond market and interest rates break his economy first? The job market is really cracking, and we have further signs that Besant himself is trying to contain the implosion. Now, if we look at the upcoming auction sizes, we can see borrowing amounts for the 10 to 30-year bonds actually dropping. In September and October, the Treasury will be borrowing anywhere from $2 to $3 billion less there. Why is this the case? Because the economy is already so unstable, the US can't afford to shift bond issuance to the long end. They can't afford for long-term rates to go up. And that's why all the borrowing is centered around shorter-term bonds. That's why the US is looking outwards to relieve the pressure of the trade war. Now, internally, they can't subsidize the economy much more. Borrowing money is also going to face a big wall of resistance. It's important we listen to what the Fed has to say because it will shape how Trump approaches the trade war as well. Monetary policy itself is making the entire situation extra desperate. According to Powell, the Federal Reserve is going to defy Trump's orders for rate cut. Interest rates will be held steady at least through September, so there's no escape valve coming in the short term. Besant will still be issuing bonds at a steep borrowing cost. More pressure will be added to the national debt, and that's why we are seeing a global shakedown happening. Within the US itself, there's very little room to maneuver. Really won't be a surprise if one day we kind of see demands for countries to ramp up their purchase of US bonds, and that, guys, will be the ultimate red flag. But let me know what you think. Will China really import a ton of Nvidia chips? Will BRICS continue defying US demands? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.